Yo, what's up, y'all? What's going on? Alright, so let me turn on the background beat a little bit. Alright, so look, check this out, man. So in the previous video, I talked about my day 7 results, right? So, and I thought about this real quick. I was like, man, let me show y'all in real time what the breakout strategy looks like for other stocks, because I could just quickly go through that in like 3 to 5 minutes or whatever. So some of the popular stocks that we see, I'm just going to start with Netflix, right? And because before I go to Netflix, like, check out the breakout and retest strategy after the first 5 minutes to see what direction the stock is potentially going to go. And with Tesla, it looks like we were going to the upside. That means it looks like price is going to continue to increase, but it took a swing, a bit of a swing here, came back. What we're looking for is an indication that price is going to continue to increase. And it looks like it because we had an increase here, some pullback, but then a greater increase here. Now, this is normal for us to have some pullback again. Typically, what we want to see is a retest to one of these levels, either this blue line that I'm highlighting here or this yellow line. And it can pull a little bit below even the lowest line here, which is the yellow line, and then start to make its way back up. If it makes its way back up in price and stops below the last highest price, then that's a sign that we're probably going to continue to the downside. If we start to go above this price, then that's a sign that we're going to continue to the upside, that price is going to continue to increase, especially if it passes the first initial high or the overall high for the day, because this would serve as the overall high for the day. Then we have some pullback, which is normal, which is why you want to carefully plan your entries, because you expect the pullback. So you want to be in that range where it pulls back, but you don't suffer a huge loss. You might suffer a little bit, but nothing great. But yeah, this would happen with Tesla today. So I want to show you that we continue to the downtrend and all the way to this point, and we're just kind of fluctuating. So we broke out. We had our first breakout above the low, the 5-minute low. This is the 5-minute high, and this is the 5-minute low. That's just plotting the first 5 minutes. So we had this breakout here. We had a retest, another retest, and we didn't maintain this level. And you can see Tesla's that's all over the place. But let's look at some other stocks. Let's look at Netflix and see what it did. Netflix had a breakout, clean breakout and retest. Look at that. Boom. So if I was in Netflix, I'd have been up today. So just because I suffered a loss, I'm only focusing on one stock, and that's Tesla, because that's what I'm practicing right now in my day trading journey. I'm just focused on one stock and trying to learn and understand its behavior. Every stock is slightly different, and it's going to behave slightly different. Some days it'll perform perfectly, like it'll match your setup perfectly. And I feel like I wanted to highlight that and call that out for y'all. Like, look, man, you don't have to trade every day. You can wait until you see like the ideal setup here. Like, this looks great. This looks great. You could have caught it both up, going up in price and down in price. Now, it eventually fluctuated, came all the way back down. It's consolidating here, so it's just kind of staying in between, then came back, broke the high, and then started up again. So I'm showing y'all, like, man, you just don't know. You just got to kind of watch and see how everything is going. Let's take a look at SPX. This is an index. Now, at the open, it gapped all the way down in price. So that means it decreased in price significantly from 5667 to 5492, right? So we're waiting for a breakout from this level or this level, right? So we had a little bit of a breach, not really a clear breakout. I wouldn't call this a breakout, but this is a breakout. Now we had a slight retest. We had a little continued the trend. It's like, oh, okay, we gapped to this point, so we closed here, gap open here, or excuse me, here, we closed here, gap open here, so it jumped. Like that could be scary. Like this index is crazy, man. And then we closed at this point in this second candle, and then continue that downtrend. So if you were in SPX, yeah, man, you would have made it after this retest. If you got in at this point when it hit this level, this key level here, yeah, that would have been another upside. If you decided to get out because you saw it closed above this yellow line here, you still would have been up, right? From this point to this point. All right, that's a significant amount of change right there, because these indexes, they go crazy. Like $100 can get you 1,000 like that. Now let's go to Meta. Meta broke out, had a retest, and maintained that till about this point, and then it pulled all the way back again. So you would have made money there too. All right, we saw what it did. Kind of swung back and forth, and then pulled all the way back, and now it's going back in the opposite direction. Let's take a look at Microsoft. Microsoft had a clean breakout and retest. Love it. So if you had got back in at this point, you would have made money too. As soon as you start to see it pull back, even on this candle, because that could be scary right there. But you wait till it closes. It opened here at 370 and closed at 370.49. So we was at 370.35 and closed at 370.49. It went as high as 371, 371.17, but sellers pushed it back down, and that's where it closed. So you still want to wait until the candle closes. Sometimes if you wait till the candle closes, it could have closed here. You could have lost the majority of your profit. You still would have been profitable, because if you got in here, you still would have been profitable. But yeah, so it made some money, and then it came back and did another retest slightly, but it broke the level, kind of came back to this level to see if this is going to maintain support, and it did temporarily, because we went to the upside, prices increased, then it bounced and came all the way back down again and broke again below the 5-minute low. And now we're doing some range trading here, like some range activity here, like consolidation, not really picking a clear direction, but then we went back above the 5-minute low, and now we're trailing up again. Let's take a look at SPY. SPY looked like Tesla. It looked like it was going to increase in price, had some pullback, increased a little bit again, pullback, came all the way down to the low, the 5-minute low, had some increase, some momentum, but then continued to break out. So now we have a breakout. We have a slight retest here. If you had got in here, you would have suffered a little bit of a loss, because it pulled back as low as 545, right? But then it continued its trend downward. So that's why I said you gotta kind of playing your stop losses and how much you're willing to lose, because it could pull back and work against you on the entry of your trade, right? And that's cool, that's expected. So that's why your stop loss is important, because if it hasn't reached your stop loss, then you can keep it, stay in the trade and give it time to develop, and you see what happened if you did that. And so now you can say, look, I made some money, man, I'm about to get out, but I'm gonna wait until it kind of retests this first level here, this blue line. And you could have got out at this point, or you could have waited until it tested the yellow line and got out at this point, still made money, right? Or you could have said, look, if it doesn't breach or cross over that yellow line, I'm gonna stay in. But you can see it wasn't too much of an increase in profit from this point to this point. So it's just a decision you make. Me, I would have got out at this point, or as soon as I started to see it pull back to this first level here. Let's take a look at Google, since that's a popular stock. Google was going crazy. Like, look, it's just swinging. So this is the kind of stuff you want to stay away from. Like, you see the first breakout, you don't trade it because it's not really confirmed. Here's a good breakout and then pullback. You enter here. It hits your stop loss maybe about this point. You see it come back. It's kind of trying to maintain this level, so let's give it a range. It doesn't have to be exact. But as soon as it starts to pull back, it's like, all right, look, yep, you just hit my stop loss, I'm out. So that way you would have preserved, reduced your risk, because now it's still continuing to go crazy. Let's look at Apple. Let's look at one more stock after this. Nvidia, which is a chip. Or maybe we'll look at two. But look, we had a clean breakout. We don't trade the initial breakout. You can if you want to, but the setup, the strategy says not to trade the first. You wait for a pullback. So we get that. Look, we would have made money. You get the pullback you're waiting for. You enter your trade. You make some money. You see it pulling back. You don't have to wait. You can see it pulling back after this one. And it's like, yeah, I'm gonna take profit. I see profit. I'm gonna take profit. I'm not gonna wait. Sometimes you can just take profit and it can continue going down, and you could have made more money, but it doesn't matter. You see profit, take it. You don't have to wait, because it can start to work against you at any point. That's why I think it's good for me to go over these other stocks so you can see what happened and what would have happened as far as your profit and losses are concerned. This started to do some crazy stuff too. Like, you can see, like, yeah, that's why it's cool. Like, you see profit, take profit. Get in, man. Get your money. Get your money. This is like before 9 o'clock. The market opened at 8:30. Before 9 o'clock, you up and you get out and be like, I'm done for the day. So that's my aim. I want to get in as quickly as possible, take my profit, and be done. I'm not trying to sit in for all of this or wait for it to make more money. I could have made 10,000 or 5,000 or 1,000. Doesn't matter to me. I made profit. I'm good. Wait for next day. All right, cool. We're going to wrap it up with these two stocks, QQQ. This is a clean breakout. Don't trade the first one. We wait for the second one. Pullback. Boom. All right, so we look like some good activity here. We get in. You would have made money. Get out when you see it pull back. You could have stayed in and waited for the close above here, and you still would have profited. But like I showed you with those other stocks, it's not always guaranteed. Let's look at Nvidia as the last stock. So it did what Tesla did. We was going up. We had a little breach, not a clear breakout. Had a breakout here, some retest, but we didn't maintain this key level high at the 5-minute high. We came all the way back, breach again, came back, breach again. So it's like, I'm not getting into that. If you did decide to get in at this point, you would have, if you stay strict with your stop loss, you would have reserved, your losses, reduced your losses. But here, we actually had a clean breakout to the downside. Don't trade the first one. We wait for the retest. Boom. We have the retest. You get in, you would have made money. Wait for some pullback to the blue line. You would have did that, you would have made money. Soon as on this candle here, you would have got out. Because look, we pulled all the way back, you would have lost the profit that you earned. And if you were waiting for it to come back, he's like, all right, cool. Now I'm going to take profit because I didn't take it here when I was here. So now you take profit, it starts to pull back, you're out of there. Or you out of there at this point. Because if you stayed in, then you would have lost that. And sometimes you can wait for the whole day to develop, and it might end in a profit zone, right? Or it might end in a loss zone. So you have to decide what's feasible for you in terms of your risk, your maximum risk amount, all right? That's what's key. Keeping a strict stop loss. Don't be playing mind games when you enter into your trade. Know what you're going to get out before you enter the trade. Know your maximum loss target before you enter the trade. It's like, don't play around, man, because you can lose a lot of money that way. Then you fall into the mindset of trying to chase to get that money back that you lost. Then it really gets out of hand, all right? So that's really an ill-advised approach. Don't do that. Stay with the strict stop loss, all right? So it's your man Ace. Wanted to show you and highlight those key points with the other stocks as far as my strategy is concerned, so you can take a look and see what would have happened with those other stocks and why I'm not trading those other stocks, because I'm sticking with one to understand its behavior and test the consistency of my strategy, which has been consistent. And had I stuck to my own stock, my strict stop loss, I would have only lost $100 today. So I just decided to test something out for that higher chart to see what would happen, since I'm in this testing phase and it's appropriate for me to test that. And I already decided how much the maximum amount is I would risk. And so, all right, y'all, it's your man Ace. I'm dropping the mic right here. Later, I got more content, so stay tuned.